Hi, I'm Sunil, and in this episode of Systematic Property, we'll be talking about the most important number in real estate. It's the IE ratio. Let's go find out what it is. If you tell me the IE ratio on your deal, I can tell you how risky it is. The IE ratio is nothing but representation of the income versus the expenses on a monthly basis on a property. It tells me how likely you are to get into trouble if the property market turns. For example, let's say that my income on a property is $1,000 a month and my expenses are $900 a month. Now, if we look at the IE ratio on that, it's going to be 1,000 is to 9, or if we divide those two numbers, it becomes 1.11111 reoccurring. That's the IE ratio. And that basically tells me that if you have 1 month where you have no tenant, then pretty much you're breaking even. And if you have 2 months where you don't have a tenant, then you're losing money. So an IE ratio by itself is kind of like meaningless, other than telling me roughly how many months you could go without having income to break even. But it doesn't tell me if it's good or not. The only way I can do that is by comparing IE ratios on two deals. And when I'm looking to invest, I'm looking to actually analyze the IE ratio on as many deals as I can, because of course the higher the ratio, the safer the investment. If I have a deal where my income is 1,000 and all of my expenses, including my mortgage, is only 500, that's a much safer investment. That's an IE ratio of 2. And of course 2 is bigger than 1.11. And now I can tell you that the IE ratio of 2 deal is safer than the IE ratio of 1.1. Because guess what? I can have many more months with no income and still make money. Or my expenses could go up and I would still make money. So this is a very important ratio when you're looking to invest in property, is to work out the IE ratio. And of course, it's only important for cash flow investors. If you're not looking to make cash flow on a monthly basis, who cares about the IE ratio? And most people don't. They're looking to make money. Oh, I'll buy it $1 million and sell it $2 million. That's what they want to do. But success in real estate, I keep on saying, is down to long-term management. Long-term management success is down to money on a monthly basis. And that means I need a good IE ratio. So for me, the IE ratio is the fundamental ratio or formula that I look at on my investments. Now, an IE ratio of 2 doesn't tell me it's a good deal. I need more information than that other than just the IE ratio, because an IE ratio 2 might mean to say that I only make an ROI of 12%. But another deal with an IE ratio of 2, I could be making an ROI of 50%. So I have to take more into consideration. But of course, the IE ratio is one of the first things that I look at on an investment. Is it higher than 2? How easy is it to find an IE ratio deal of 2 in the world right now? It's pretty hard. Most investors are happy with 1.1, and many investors I know are happy with less than 1. That means each month they're paying money into their properties from their own pocket, which is crazy. For me, I won't invest unless I get a very good IE ratio. Sometimes I'll accept 1.5 if the market is at a low point. Sometimes I need to accept 2.53 if the market's at a high point. And these kind of things based on the market trends are important to understand. Let me tell you some of the IE ratios I found recently in places you wouldn't expect to find those IE ratios. In the UK, we found an IE ratio of 3.65. Now that might sound crazy. That means that the income on the property is 3.6 times the expenses on a monthly basis on that property. In Dubai, where people again expect to have a very small IE ratio of maybe 1.1, maybe 1.2 if they're lucky, we're looking at 1.8, 1.9. And in America, wow, that's the land of IE ratios. We've seen IE ratios as high as 5 and even as high as 5.5 in some areas. So if you want to be a safer, or you want to have safer investments and be a safer investor, look at the IE ratio and choose properties with high IE ratios, because you can withstand the ups and downs on a longer term, and that guarantees you'll make money. Thanks for watching. I'm Sunil.